I want to bring here Laura Besarati from CommSec. Laura, the markets, just explain how they immediately interpreted the Reserve Bank's analysis of the economy today.
Good afternoon, Ross. Well, look, as we've already heard, they left rates steady, as was widely expected by all economists that were surveyed. The instant reaction was that the Aussie market jumped. So we're down by about 2/3% prior to that decision being handed down. We were only down by around 1/5% immediately after that decision was handed down. We saw the Aussie dollar also fall by almost 1% on a more dovish tone. So, of course, the reason for the positive reaction was because they seem to be moving away from their hawkish tone. They said the board is gaining some confidence that inflation is moving sustainably back towards the 2 to 3% target. And of course, they removed that line that said they're not ruling anything in or out. So they're seemingly preparing markets for a potential rate cut in the coming months.
Okay, so just on that subject, if they're preparing markets for a rate cut, how have markets changed their pricing for the next rate cut? Is that changed at all?
Well, look, at the moment, it looks like there's about roughly a 60% chance of a rate cut in February, which will be the first meeting next year. But it is fully priced in for April at this stage, with 70 basis points of easing priced in for the next 12 months. Of course, we do have that jobs data coming out on Thursday, and then we have quarterly inflation right at the end of January. So those things could potentially move these expectations, Ross.
Laura Besarati, really good information. Thanks so much for that.